Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're going to take a quick peek at JD.com's earnings. For those of you who are unaware, we're big Alibaba fans here. We have a lot of our personal portfolios invested in Alibaba stock. So I wanted to take a quick peek at the nearest competitor in terms of their most recent earnings report and see how that affects our Alibaba positions.
And if you watched this video earlier today and it was messed up, it was entirely Vinny's fault, not mine at all. If you like this kind of entertaining stock market content where it's two super guys trying to figure everything out, give us a like and subscribe. Two super guys trade stocks.
All right. I kind of talked about this in our Alibaba, fourth quarter of 2021 video, but I wanted to see how JD and Pinduoduo, who the two other competitors in the Chinese e-commerce space, did in terms of the most recent quarter, to see if we get a little bit of a taste of whether or not Alibaba's recent deceleration in growth is an Alibaba issue or whether it was Chinese e-commerce in general.
Right. We are hoping for China e-commerce, not the other one.
Yeah. So interesting, looking at the different charts here. If you look at Alibaba, it's been like a nice consistent downward trend. Um, Whereas JD was, choppy, but very much like range bound, I would say, kind of trending flat. And then they had the massive fall off a cliff here with their recent earnings, which is really quite scary and worrisome, I guess, if
Yeah,
you're a JD
Alibaba's
owner.
been just trending down. This has been more consolidating at a between a price range, and then it just left, just tanked.
Yeah, yeah. I mean, not pretty at all when you see these two giant red bars down here. There was also some kind of geopolitical news there. Not only do we have like the whole Ukraine-Russia war thing going on, but we also had a little bit of resurgence in this whole delisting risk talk come out at one of these red bars here. So, not entirely, unique to them. But this is a little bit more zoomed in. This is just a 1 month chart. Like I said, it was pretty consistent, chopping back and forth in this kind of range right here. And then all of a sudden just like broke through and is headed down for the basement.
Nice.
Yeah. So these are the kind of like headlines you saw basically after JD's earnings report, that the stock basically slumps or plummets, depending on how inflammatory they want it to be in their headline grabbing attention there. It's very funny how they pick and choose those words. But it actually declined 17% in 1 day, despite the fact that the revenue was up 23% year over year, which was more than Alibaba's revenue growth,
Yeah, what was Baba's?
10% for the most recent
10%.
quarter. The whole
Yes.
year was in the low 20s. I think it was like 21%, but 10% for the most recent quarter.
And the issue that kind of a lot of tech companies were having, where they had a gross 2020, so then you
Yeah.
show slowing growth. It's really not fair. They just had an incredible 1 year that threw off all the stats.
Yeah, yeah, yeah. I mean, it was worldwide pandemic, so a lot of things were very different. People using e-commerce a whole lot more. So I'm kind of not surprised coming up on tough year-over-year comps. Plus, you also have the kind of the step up in regulation by the Chinese Communist Party. So you're going to see a little bit of decreased growth there for a period of time. But they still have some great tailwinds in this growth of the Chinese middle class. Chinese consumer spending has also been basically flat of late, which is not great. There's some questions regarding the housing crisis there. You remember the whole Evergrande thing. So if
Yes.
you actually look at the Chinese, kind of real estate bond market, you're still looking at these bonds trading at 30, 40 cents on the dollar. So distressed level debt pricing still. So there's some underlying economic worries for the
Right.
Chinese economy,
Makes sense.
which is kind of interesting. This week, as we're filming this, we're anticipating the Federal Reserve in the United States here is going to actually increase interest rates. There's some debate whether or not the Chinese are actually ready to go the opposite direction and decrease their interest rates and try to stimulate their economy a little bit. But this was the actual press release from JD's fourth quarter 2021. Earnings there, 23% year over year growth, which is good. Unfortunately, they actually lost money, 61.5 million in the most recent quarter. Not pretty.
Did Baba ever lose money? Not ever. Sorry, in
Uh,
the last 3 years.
Yeah, not recently. No, no. They're
Boo.
they're they're still profitable. A lot of this was due to both stock-based comp and then also they said some kind of higher input costs and also the prices on their actual distribution network went up. Baba reported the same thing in terms of having higher logistics costs during the same fiscal quarter there. Now, in terms of kind of the business design. JD's a little bit different in that JD is the seller ultimately a lot, whereas Baba is more like a marketplace. They do some actual direct sales themselves, but they act more as a marketplace than JD does.
Yeah, Baba's more Amazon.
Yeah, yeah. Amazon does do a lot of their own fulfillment as well, though. But it's kind of twofer there. Now, if you look at the actual down here, the consumer growth, they had 20% consumer growth, which is very respectable. But you have to look at the number of consumers too. They're only still about half the size in terms of active consumers compared to Alibaba, which is like 1.3 billion consumers.
Nice.
Yeah.
All right.
So
Makes you feel better about my
now,
Baba position that they didn't lose cash.
definitely a more dominant market position for Alibaba. This is a couple years old, but Tmall is one of Alibaba's subsidiaries. This is the kind of the big consumer one. If you look at the market segment there, JD is half approximately or so as of this time frame in terms of e-commerce compared to the Alibaba product.
Okay.
So it makes sense to have better growth. Yeah, I mean, still consistent revenue growth over the years. Very respectable for JD.com. They've been a little bit more inconsistent as far as their net income. And you know, it's hard to kind of really then extrapolate this forward and do like a good kind of a valuation based on like cash flow or discounted free cash flow methodology when you have kind of inconsistent growth in terms of the net income itself. Multiples, you've seen the multiples kind of contract here, but if you're actually looking at PE, so I want to say they're at about a PE of 17. Baba's at about a PE 12. So Baba's still cheaper on a multiple
Are they
basis.
12? I thought they. I think
What about
after this last like 2 day like 9% drop, I think it's like 10 now.
Yeah, I won't buy macro trends data just to keep it consistent because this is from macro trends.
Got it.
Same thing with price to free cash flow. They were still priced higher than Baba, which is only at like a 7.8 price to free cash flow ratio right now. Absolutely disgustingly cheap. That's a 12% yield on your money in case you like wanted to think about the math that way.
Yeah, it's absolutely wild. I think I mean their market cap after this last drop is like around 200 billion ish, not JD, Baba. And they have like
Yeah,
70 billion cash.
yeah, it's in the 200s. Like I think it's 260 somewhere in that ballpark. I'd have to look at what it is right now. But yeah, pretty disgusting. If you net cash, then I guess you get into that 200 number.
Gross.
Yeah. And then this was that same repeat chart, but still pretty disgusting. I mean, I would say overall, this is pretty much what I expected. You did see higher growth than Alibaba, which is to be expected, like I said, given their smaller size. Their net loss, I don't think people were expecting, which is why they got that 17% drop in one day. But they were still free cash flow positive. It's just, an actual loss based on, like I said, stock-based comp was like the one that really kind of swung them over.
Which is your
Which is
favorite thing?
It's a real expense. No matter what people think, even though it's not cash coming out of your checking account, it still takes away value from the business owners, so shareholders.
Oh yeah,
So
for
that's
sure.
how I think about it. Yeah,
Yeah, no, absolutely. Does this make you feel better about your Baba shares?
it does. It does. They're still trading cheaper and they're still in a more dominant market position than JD.com, their nearest competitor. So it makes me feel a little bit better about my Alibaba shares.
I would agree. I like that Baba hasn't lost money and JD did. The other thing is I know that Baba was kind of like the what's the bad people and I'm gonna get so much crap. The Republic in Star Wars.
Oh, it's Star Wars. Yeah.
What's the
I
bad
think
Darth Vader's
I think
people?
Darth Maul,
I don't
the
know.
guy with
There's like
the
whatever.
Sith.
They're
Sith?
sure. They were the Sith for a little bit because they had so much bad press. I'm gonna get eaten alive for that. They had so much bad press, and JD was like, "Oh, we're coming up and all that stuff." But
Yeah.
Baba's just it's just so much bigger. It's crazy.
Yeah, much more dominant market position than even Amazon has in the United States.
Yeah, and
It's
Amazon
crazy.
seems very dominant because I buy everything from Amazon. So
Yeah, yeah, exactly. And
yeah,
if you look at like Alibaba e-commerce, Chinese kind of data based on age, it by far and away, as the population kind of grows up in China, you're going to see people continuing to use it more and more. It's become more and more entrenched in their daily lives and spending a larger portion of their income on e-commerce platforms.
yeah, for sure. All right, guys. Well, let us know if this makes you feel good, bad, if you're in JD, Baba, or if you're just along for the ride. Yeah.
All right, catch you on the next one.
Boom.